In today's market update, we're going to be taking a look at several instruments. I am still traveling, and so I am dealing with several technical issues, including the fact that I do particularly enjoy very small, lightweight laptops, and recording these market updates on very small screens is proving to be a challenge. But I decided what I would do is take a look at several instruments. We're going to take a step back, consider the longer term picture, and then look at some FLD targets so that you have some useful information to work with going into the next 2 weeks. Starting with the S&P 500, this is SPX data, and you can see this is a longer term view. We're looking at a weekly chart here, and this analysis has a 9-year cycle trough as having formed in October of 2022. Now, when we take a look at the various different instruments we're considering today, you will see that there is some debate as to whether the major trough of potentially 9-year magnitude occurred in October of 2022, or did it occur in October of 2023, as some instruments seem to indicate. And there are a few instruments that have that longer term cycle trough at other dates within that range. But we're not going to spend too long debating the finer details of these analyses. The important thing about this analysis is that we had a major trough over here towards the end of 2022. We have since experienced two 18-month cycles. And of course, the most recent 18-month cycle is this cycle trough that occurred on the 7th of April, which in recent market updates we have been identifying as an important cycle trough. And so that is the bigger picture. Of course, the implication of this analysis is that this is the third and therefore final 18-month cycle in a 54-month cycle. And so in about another 18 months, we are looking at a fairly big cycle trough forming. Zooming in and looking at the finer detail, you can see that 56 bars have elapsed since that trough on the 7th of April. And the next cycle event that we are expecting is an 80-day cycle trough. Here is the nest of lows for that 80-day cycle trough. It is expected, you can see, according to this nest of lows, later this week or perhaps sometime next week. The average length of an 80-day cycle is 68 days. And if you don't understand why that is, I would encourage you to download the document that I will provide a link to in the description below this video, which explains some of the basic concepts of the Hurst cycles approach. And so according to the average wavelength, we have another 12 days to go until this 80-day cycle trough forms. You can see that the recent average wavelength at the bottom right hand corner of the screen over here for that 80-day cycle is in fact shorter than the average wavelength. It is 61.3 days, and so we might have only another 5 days to go. I should point out that if this market is bullish, and it clearly is bullish, as we can see on the chart, then cycle troughs tend to occur early, and so we should expect this 80-day cycle trough to occur earlier. Taking a look at the interactions between price and the 20-day FLD, a very useful FLD, particularly for the time frames that we consider in these videos, you can see that in the interactions between price and the FLD, we had price not quite coming down and crossing below the 20-day FLD, which is what usually happens at the 40-day cycle trough, indicating the bullishness that is clearly present in this market. Price crossed down below the 20-day FLD over here in what we would usually label an F category interaction. Price tentatively poked its head back up above the level of the 20-day FLD. This is most likely a category GH interaction pair. This is what happens when price finds resistance at the level of the 20-day FLD before its final move down into this 80-day cycle trough. We discussed some FLD targets for the S&P 500 in the previous market update. Notice an interesting thing that is happening with this 40-week cycle FLD. Price has failed to get above that 40-week cycle FLD, but if it achieves the target generated by crossing above the 20-week FLD, which is at a level of 6,860, then indeed price will cross above the 40-week cycle FLD and generate a further target to the upside. Taking a look at the Nasdaq, this is the weekly chart, and here is the longer term picture that I am considering at the moment. You can see that we have a 54-month cycle trough over here that formed not in October of 2022, but according to this analysis, in December of 2022. Again, we could debate the finer details of this analysis, but the interesting difference between what we are seeing in the Nasdaq and in the S&P 500 is that we have an 18-month cycle trough in this analysis over here. I think that is in August of 2024, and the recent trough that formed on the 7th of April, according to this analysis, is a trough of 40-week magnitude. Now, we could debate the longer term analysis, and there are alternate analyses that raise the magnitude of the cycle trough in April to a magnitude of 18 months, which matches the S&P 500 index. But for the moment, I believe this is the most accurate analysis in the Nasdaq. For the purposes of the time frame that we are considering in these market updates, whether this is a 40-week cycle trough or an 18-month cycle trough makes little difference, because generally we are only looking a few weeks ahead, and a 40-week cycle trough is a big enough cycle trough to give us the kind of bullish move that we have seen. Zooming in and considering what is happening now in the analysis, we also have an 80-day cycle trough that we are expecting. This is expected slightly later than the analysis in the S&P 500. It is expected in about the middle of next week, as opposed to later this week or early next week. And we can see a very similar interaction between price and the FLD, with price crossing down below the FLD last week in what is probably an F category interaction. Then price came back up, poked its head above the FLD, and is struggling at about the level of that FLD. This is most likely also a G and H category interaction pair and precedes the final move down into this 80-day cycle trough. Bear in mind, however, that the market is bullish and that we could expect an early 80-day cycle trough to form. Looking at some other FLDs, the 40-day FLD projected a target of 21,035, which was of course achieved over here about 3 weeks ago. The 80-day FLD projects a higher target of 22,500, which has not yet been reached, and so we have an outstanding target up above us. And the 20-week cycle FLD has also been crossed, generating a target of 24,800, which would of course imply further bullish price action after price bounces out of the upcoming 80-day cycle trough. This is the ASX, or Australian Stock Exchange Index, and you can see that we have an important, again, 9-year cycle trough over here. In this case, it is not in October of 2022 or even in October of 2023. We have a southern hemisphere twist on this analysis, which places that long cycle trough in June of 2022. We then have an 18-month cycle trough over here in October or perhaps even early November of 2023. And then this important cycle trough that we have been discussing in recent market updates that occurred in early April is now a trough of the longer cycle. Now, I have mentioned before that I use a different nominal model to analyze the Australian market. This could also be debated, but we don't have time for that today. In this case, I am looking at a 40-month cycle trough, and you will notice that the harmonic ratio between the 18-month cycle and the 40-month cycle is of course 2-to-1 instead of the usual 3-to-1 harmonic ratio that is found in the default nominal model defined by Hurst so many years ago. I have found that this analysis works well, or I should say this nominal model works well for the Australian market, but it's an interesting subject that we could perhaps debate at some point in the future. The important thing for now is that, of course, the Australian market is bouncing out of a big magnitude cycle trough, potentially a 40-month cycle trough, and that, of course, explains this tremendous bullishness that we have seen as the market bounces out of it. Zooming in and taking a look at the detail on the daily chart, you can see that again we have an 80-day cycle trough that is expected. This cycle trough is expected a little later than in the S&P 500. Similar to the Nasdaq, it is expected in about the middle of June. Here we have our various FLDs. The 40-day FLD projected a target of 83.93, which has of course been achieved. 83.93 was over here, and the 80-day cycle FLD projects a higher target of 8,673. The reason for that, even though it looks as if though the 40-day and 80-day FLDs are so close together, is because of course we have to measure the point at which the median price crosses the FLD in order to generate the target, and that occurred at a higher level, giving us a higher target. We also have targets generated by price crossing over the 40-week and the 20-week FLDs. I should point out that the 40-week and 20-week FLDs, we calculate the targets of a weekly chart, and you will notice the price has been pretty much tracking along the 40-week FLD, as you can see on this daily chart. And so it is not yet a clean cross, so we are more likely to generate a clean target after the 80-day cycle trough forms. But in the meantime, those tentative targets are at a level of about 9,200. I've been asked to look at the DAX. We don't often look at the DAX. This is, of course, the German market. This is, again, a weekly chart, and we're looking at the bigger picture here. In the DAX, we have our 9-year cycle trough over here in October of 2023. And so this is one of the family of instruments that have that bigger magnitude cycle trough in 2023 as opposed to 2022. This analysis provides us with a fairly obvious 18-month cycle trough for this April low over here. The interesting thing about the DAX, of course, is that the rise following the April trough has climbed up to a new high, exceeding the high in early 2025, which is something that the US markets have not yet done. Zooming in and looking at the daily detail, you will notice that here too we are expecting an 80-day cycle trough. This is also expected a little later in the second or third week of June. Notice the different configuration of the FLDs. Here is the 40-week FLD, and you can see that when the 18-month cycle trough formed in April, price only dipped down below that 40-week FLD for a single day, clearly finding support at the level of the 40-week FLD, which is an interesting detail about this analysis. You can see that price has recently crossed up above both the 80-day FLD and the 20-week FLD at roughly the same level. These FLDs project targets up to levels of 26,400 and 26,600. And so again, after the 80-day cycle trough forms, we would expect further bullish action. It is worth mentioning, as I pointed out in the previous market update video, that following a major magnitude cycle trough, as we found in April, the 80-day cycle trough is very likely to form at about the level of the 80-day FLD. And so here you can see the 80-day cycle trough is expected in about the middle of June, and there is the 80-day FLD. We will be watching the 80-day FLD in the DAX for signs that the 80-day FLD is providing support for the formation of that 80-day cycle trough. Here is a weekly chart of the Nifty 50, the Indian market, and again we're taking a bigger picture look at what has been happening here. We have a different analysis to the analysis that we have been tracking in the US markets. That is because we have our 9-year cycle trough in the Nifty occurring in early 2020. That is the low that I often call the pandemic low. It was a low point that was inevitably distorted because of the pandemic that was sweeping around the world. However, in the Nifty, it works well as a 9-year cycle trough, because here is our first 18-month cycle trough that is in June of 2022, and over here in October of 2023, which was labeled the 54-month cycle trough in other markets that we have been looking at, we have another 18-month cycle trough. That indicates that this trough that formed over here in April, or potentially a little earlier in the Nifty, as we will see when we zoom in, was possibly a trough of 54-month magnitude. Now, as I've mentioned before, when it comes to these market updates, whether this is a 54-month cycle trough or an 18-month cycle trough is something that I tend not to debate in great detail, because it doesn't matter very much in terms of the sort of time frame that we are looking at in these videos. It's interesting to consider that this is potentially a 54-month cycle trough, but I certainly would not be defending that very strongly. It is quite possible that the trough was only of 18-month magnitude, and of course this October 2023 trough might be a better position for that 54-month cycle trough. Zooming in, you can see why I suggest that the major trough in the Nifty might in fact have occurred a little earlier, about a month earlier over here. That is because this kind of price action is more robust, in my opinion, than the single day on which price jumped down to form a new low in this position over here. This, to my mind, looks very much like what Hurst described as fundamental interaction, when news events happening around the world cause increased volatility and strong price action that are possibly not as meaningful as they might seem to be when looking at the price levels on the chart. And so I think it is quite possible that this trough in March should in fact be labeled as the major magnitude cycle trough. Nevertheless, the Nifty too seems to be coming in at the moment into an 80-day cycle trough. Bearing in mind the bullishness of the market, that cycle trough could occur early, and I would not be surprised to see the Nifty as one of the first markets to form that 80-day cycle trough. We have some interesting FLDs in the Nifty. You will notice that the big magnitude cycle trough, whether it occurred in March or here in April, only just dipped below the 18-month cycle FLD, and when considered on a weekly or monthly chart, which is where we should be considering the 18-month cycle FLD, that indicates that price in fact found support at the level of the 18-month FLD as opposed to actually crossing it. The 40-week cycle FLD generates a target measured off the weekly chart of 26,813. And so again, we have a bullish target for the Nifty, and I would not be surprised to see that target being reached after the 80-day cycle trough is formed. I'm going to do things slightly differently when it comes to gold, because we're not going to step back and look at the longer term picture at the moment. You will know that in recent market update videos we have been discussing the potential for a very big magnitude cycle peak to form, and here you can see in the peak analysis displayed at the top of the chart, it all becomes a little messy when we've got two analyses on our chart, but up at the top you can see the peak analysis is showing a 54-month cycle peak has formed in gold. That's a very important cycle peak, but I am not going to place too much emphasis on that peak analysis at the moment. It is possible that gold will reach up and form a higher price, which will turn out to be that 54-month cycle peak. The important thing is that we are in a time period in which gold is going to form a very important cycle peak. I prefer for now to focus on the trough analysis, which has proved to be fairly reliable. So let's hide that peak analysis. And focusing on the trough analysis, we had a trough of 20-week magnitude. Some analysts argue that this might be a 40-week cycle trough that formed in April, at the same time, of course, as that important trough formed in stock markets around the world. We have a very clear 40-day cycle trough that occurred over here in the middle of May. And the next thing that we are expecting in gold in terms of the trough analysis is also an 80-day cycle trough. You can see a fairly clear M shape developing over here, which is why, in my opinion, the trough analysis at the moment is working fairly well for gold. We are now rising up to the peak of this 40-day cycle, after which we would expect price to turn down again and come down to form this 80-day cycle trough. During this period of consolidation over the past few months, we do not have much clarity from our FLDs. However, the 20-day FLD has provided us with some fairly good interactions recently. Here is the D category interaction as price crossed down below the 20-day FLD on its way to the 40-day cycle trough. The E category interaction as price crossed back up above that 20-day FLD, which projects a target just a little higher than price has reached so far. Price then came down and gave a post-E category tap, if you want the technical term for it. It hasn't successfully crossed down below that 20-day FLD. It is still expected to cross below the 20-day FLD on its way down to the 80-day cycle trough. Finally, in Bitcoin, we're also going to take a step back. This is the weekly chart. Notice an interesting thing about Bitcoin is that even though it is considered to be a very different market to the traditional markets that we track, it has been beating with a very reliable rhythm, following the same cycles that Hurst discovered 50 years ago. And the 54-month cycle trough in Bitcoin possibly occurred in December of 2022, only a couple of months after that trough occurred in stock markets. As discussed in the previous market update video, this 54-month cycle trough could be displaced to the next 18-month cycle trough, which formed over here in August of 2024. But in my opinion, the better position for that trough is late in 2022. This means that the important cycle trough that formed in early April, not only in stock markets around the world, but also in Bitcoin, was a trough of 40-week magnitude. Now, in our previous market update video, we had still not been able to confirm that this trough had formed, but the evidence pointed to the fact that that was the trough of the 40-week cycle, and indeed now it has been confirmed in the analysis, as you can see. This means that Bitcoin is now bouncing out of a 40-week cycle trough. We have further bullish price moves ahead of us. The next 18-month cycle trough, as a matter of interest, is only expected towards the end of this year or early next year. Looking at more detail on the daily chart, we have, of course, our 56 days that have elapsed since the important trough in April. The average length, again, of an 80-day cycle is 68 days, so we could have up to 12 days still to wait, or even longer, because of the principle of variation. But again, the 80-day cycle has been running short in the Bitcoin analysis at 61.3 days, exactly matching the wavelength that I think we measured in the S&P 500. And so the 80-day cycle trough is the next event on our cycle calendar. Looking at the 20-day FLD, we have some of the cleanest interactions with this FLD of all of the instruments that we've looked at today. Here is, of course, our A category interaction following the trough in early April. Here is the 40-day cycle trough forming not below the level of the 20-day FLD, but at the level of the 20-day FLD, indicating, again, the bullishness that is present in this market. Price has crossed down below the 20-day FLD. This is our F category interaction as price heads down towards the 80-day cycle trough. We have two longer FLDs that have generated targets recently, the 20-week and the 40-week FLDs. Again, measuring these targets off the weekly chart, they give us targets of $117,800 and $120,800 respectively. Interestingly, price has just come back down to the 40-week cycle FLD. Now, we should not take that too seriously on a daily chart because of the relationship between the daily data and the very long 40-week cycle wavelength, but nevertheless it would be interesting to see whether the 40-week cycle FLD provides some approximate support to price over here. And of course, following a 40-week cycle trough, we would expect the 80-day FLD, which is highlighted now, to provide support to price at the time that the 80-day cycle trough forms. So all eyes will be on that 80-day FLD over the next few weeks. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.